continue their path from success to significance, and to give them spaces where they can really reflect on their values and continue walking the path that they had intended on when they started. So that's why we exist. The Aspen Initiative in Africa is the latest international partner. We have 14 international partners around the world. As I said, Aspen is 75 years old. And we're so proud and privileged to have our partners from Aspen, France here. We have been together for a long time. And to just really thank you for your partnership. As far as for this particular event, last year in October, we went to Annecy in France. And together we started a conversation with Aspen France and some other partners about a new era of relationship between France and Africa. And we really said, if we were going to set out priorities about this new tone, this new DNA in our collaboration, what would it look like? And we came up with priorities around youth employment, around green investment, around trade and investment in general, and trade rebalancing. And we looked at all of these together and said, these are the areas where we would like to prioritize in our partnership. And you will see these themes carried forward. And we said the next meeting, and there's certain people in this room who are with us in Annecy, will be in Africa, and we will be having a conversation around how do we turn this from insight into actual implementation. And so this is the next meeting, moving along that conversation towards what are we going to do concretely that can make a difference in the lives of not just young and other Africans, but also in the lives of French and European people as we really, really deepen this partnership and respond to a world that is changing so rapidly. So that's why we're here today. Mine is just an invitation to you to bring your whole self to this conversation. As we said, it's going to be honest, it's going to be practical, and to really think about yourself in the context of how can you create conversations and partnerships that you can really take forward from here to benefit your business, your leadership, so that we can support you as we make sure that these two nations and these two continents are able to start a new era that is really responsive to the future as we know it is today. Before I step off the podium, I'd just like to say a special thank you to our sponsors. We have two partners that have worked with us as the Aspen Initiative Africa for a while. So one is Absa Bank, and they'll be here to talk to you. And there's also Centum Real Estate. And the Centum Group in general has been very supportive to us. So just thanking them and giving you another warm karibuni. Thank you.
This looks very promising, and delighted to be here with my colleagues in beautiful Kenya. It's not just a beautiful country, but it is also seen in many parts of the world as the sort of the new tech champion, and also nicknamed, also presented or portrayed at the Silicon Savannah. So this is definitely something that also guided us or inspired us in coming here to learn from your own experience in developing and championing the tech to promote economic development, poverty eradication, and the new development in Africa, but also in other parts of the world. So I don't want to be too long. I wanted really to thank Aspen Initiative for Africa and Laila, who with her team is doing a fantastic work. When we started about a year ago our collaboration, we would certainly not expect to be here today and to have so many development and productive work. And I believe that this is just a beginning, and we are extremely pleased indeed to have this opportunity to connect France, Europe, Africa, Eastern, Western Africa, and I think this is a tremendous achievement. I'd like just to say one word in complement to what Laila said about the Aspen Institute. I really believe that the greatest asset, the greatest resource of the Aspen Institute is its people, its membership. These are all people who are either entrepreneurs, successful entrepreneurs, innovators, great minds, but they are not just successful innovators and great minds. And as Laila said, these are people who are really committed to build a better society, building synergy among people, among, public and private, official, non-official, grassroots, global. And this is, in a way, quite unique to have in 17 or 15, 16 countries around the world, because we don't know exactly the exact number because this is always in the making. There are new institutes in creating in all continents, in all parts of the world. And this commitment to build a better society, to build bridges among different constituencies, among different sectors, I believe is quite unique and indeed is contributing to build collective intelligence. And I think our conference today is a perfect illustration. You are coming from very different sectors, from the public, from private, from grassroots to a global perspective. And in having a unique place with the Aspen Institute where people coming from very different perspectives, very different background can work and talk and exchange together in a very informal setting is absolutely unique and create a sort of a new mindset. A last word just to say that we at the Aspen Institute in France, we are very proud to cooperate with Aspen Initiative for Africa. This is, I believe, also a new beginning in relation between France and Africa. The official summit next week, the Africa Forward, created a great opportunity for us to work in the margin of sort of a business dialogue curtain raiser to the official summit that will keep everyone very busy next week. And I think we are, in a way, by organizing this exchange, contributing to bring the different parts of Africa together, the different countries, but also in building very solid bridges between Europe and Africa. So we are extremely pleased and very proud to cooperate with Aspen Initiative for Africa, and really we hope that this is indeed just a very beginning. I wish you a very productive talk. Thank you.
Stand in wide open spaces. You breathe. You meet the wild on its own terms. Unscripted. Unforgettable. You share food shaped by fire and time. Music that carries rhythm. Moments that feel real. And when the day ends, yours doesn't. You stay a little longer because you found something more. You came for the experience. You leave with wonder. Magical Kenya. Come, experience wonder.
And that's my wish for each and every one of you this weekend and next week. When Leila Macharia invited me to address this gathering, she's a leader I've known for a couple of years now, I reflected on what it is that this room would like to engage in. And my reflection made me to reflect on the continent of Africa, that indeed if the global economy were an orchestra, Africa wouldn't be waiting backstage, preparing to get on stage. Africa would be the rhythm that shapes the global economy. And Magical Kenya is proud to be the conductor of that movement shaping the global economy. Your Excellencies, distinguished guests, esteemed partners and colleagues, ladies and gentlemen, good morning. I'm honored this morning to be part of this conversation as we get ready for the Africa France Summit next week. Today's conversation comes at a defining moment for our continent and for the global economy. Across the world, economies are navigating policy uncertainties, climate pressure, evolving trade systems, and shifting demographics. Yet, amid this global transition, Africa continues to rise with resilience, innovation, and unmatched potential. At the center of this transformation stands magical Kenya. Kenya is positioning itself not only as a premier tourism destination, but as a gateway to inclusive, climate-aligned investment and sustainable growth in the continent. Africa is no longer viewed simply as an emerging frontier. Africa is increasingly becoming the world's next engine, powered by its youth, creativity, natural capital, digital innovation, and entrepreneurial energy. Kenya proudly stands at the frontier of this transformation. Our national development agenda is anchored on youth employment and entrepreneurship. We are keen to see green growth and climate resilience. Digital transformation is part of our bigger focus. Regional integration, as demonstrated by our president this week, is a movement we are ready to be a part of. Sustainable trade and investment is our focus. These priorities align strongly with the vision of today's dialogue and also with the future global investment landscape. Tourism and broader experiential economy are central to this vision. So traditionally, tourism has been viewed as a leisure sector. Today, it's far more than that. Tourism is a powerful economic ecosystem that drives investment, supports SMEs, creates jobs, empowers communities, preserves culture, accelerates infrastructure development, and unlocks regional trade. In Kenya, tourism contributes about 8.4% of the GDP, generating $3.8 billion annually and supporting over 1.1 million direct and indirect jobs. Most importantly, tourism remains one of the most accessible sectors for the youth employment and entrepreneurship. For every visitor who comes to Kenya, we estimate creation of approximately 11 direct jobs across the hospitality, transport, creative industry, agriculture, culture, technology, and community enterprises. So if you have visited Kenya this week, you have created 11 jobs. You should be proud of yourself. This is why tourism must increasingly be viewed not simply as a sector, but as a development multiplier. Ladies and gentlemen, the global tourism industry has now returned to strong growth trajectories, with international arrivals globally growing by 5% in 2025, according to UN Tourism. Kenya is in the momentum. We have seen a growth of 6% in international arrivals. Our hotel night occupancy has increased by 12.6%. We have seen conferencing growing significantly, and domestic tourism continues to remain one of our strongest pillars in tourism sector, contributing to 45% of our hotel occupancy. So these numbers reflect more than recovery. They reflect confidence, confidence in Kenya as a destination, confidence in Kenya as an investment partner, and confidence in Africa's future. However, as we grow, we are deliberate about the kind of growth we pursue. Kenya is championing tourism model that is sustainable, inclusive, community-driven, climate-conscious, and digitally enabled. Next time you travel to Kenya, you'll get an opportunity to choose how you want to travel. And I hope and pray that you'll choose to travel sustainably. We believe the future traveler is looking not only for destination, but for authentic experiences, sustainability, cultural connection, and meaningful impact. That is why Africa holds a unique advantage. For us, it's our wildlife, our culture, our heritage, our landscape, our innovation ecosystem, our music, our fashion, our cuisine, our creative economy, together form one of the world's most compelling experiential offerings. And importantly, these experiences create opportunities for communities and grassroots. So as we engage today, I invite us to think beyond traditional aid transactional investment, but let us build a partnership that is rooted in shared prosperity, innovation, sustainability, youth empowerment, and long-term value creation. For Kenya, tourism is not about arrival. It's about livelihoods. It's about dignity for communities. It's about empowering young people. It's about preserving ecosystem while creating economic value. It's about positioning Africa confidently on the global stage. Kenya remains open and ready and ambitious. So as you engage in your meetings and conversations here in Nairobi this weekend, I warmly invite you to take time to experience magical Kenya, the true origin of wonder. I hope you'll discover this vibrant city of Nairobi, our unique bush experience within the city, our rich culture and heritage, our breathtaking landscapes, and above all, the warmth and hospitality of our people reflected in the over 50 million smiles. Enjoy your stay in Nairobi.
Of this session. This session takes place in the context of Africa Forward, so you know the summit, the African-French summit, organized next Monday for the business side and Tuesday on the government side. For the business side, we have 9,000 people registered, so it will be a very, very big event. It's co-organized by BPI France, Proparco, and Business France. And the objective of the day is really to connect people, to create business between African entrepreneurs and French entrepreneurs. And the objective of a French public investment bank is to finance and support French companies, from the very small companies, startups or very small companies, to the very big one, because we are the big ones. We are a shareholder of Orange, Stellantis, ST Microelectronics, etc. So, and for that, the motto is simplicity. So we have created a continuum of products to finance and to support companies. We make grants, reimbursable advances, we finance innovation, we invest in private equity funds, we invest directly in companies. We also have make credit export. But from the very beginning of BPI France, we decided that Africa was very important, and that French companies had to cooperate with African companies, and that we had to finance and to support French companies to go to Africa. But that's what's not the only way we wanted to support French companies to go to Africa. We had other activities pre-existing from BPI France. I was part before BPI France of CDC Entreprises, one of the companies that has merged to become BPI France. And almost 25 years ago, we have launched the first European Mediterranean African Fund of Funds. During the summit, we are going to announce a new initiative with a big Moroccan industrial. I just have to wait on Monday before talking of this initiative. But we are very happy to have this partner in order to continue to support African companies and PE and VC activity in Africa. That's one part. That's one of our activity in Africa. We also make export credit and insurance export. So we lend money to African companies or African government. If they are interested in buying French goods or French engineering. We also have this a digital platform called Euroquity. The objective of this digital platform is to connect innovative companies with partners, Those partners can be other companies, but also those partners are investors, and we are very well developed in France, of course, in Europe, but also in Africa, in Canada, and soon I hope in Middle East. We have on this platform 25,000 entities able to connect each other. And last but not least, we also have developed an activity of technical assistance to advise African government, not only African government, because we also have this activity in Europe and in the Middle East, but for today I will talk of African government, when they want to create or develop entities looking like BPI. And what I mean, a one-stop shop with a continuum of financial and supporting tools for companies. And we have launched also this activity some years ago with the French, l'Agence Française de Développement. So it's an activity we are practicing together, l'Agence Française de Développement, lending money to African governments, and BPI France doing the technical assistance. Voila, so I'm very happy to be here. I'm letting the floor to the following people, and thank you again for welcoming us today.
Thank you so much. It's amazing when the French say so many interesting things and then say, voila, like, okay, summing it up. Thank you so much for that. And again, karibu.
I thought I was actually getting away without doing a speech because I was about to be skipped and we would have gone straight into the panel with Betty, but it's really good to be here. Excellencies, business leaders, heads of delegations, my colleagues from the business community in Kenya. I saw on the video one of the board members of ABSA, but I don't know which side. There she is, Caroline Armstrong from my board. You know, when your board member is in the house, you have to recognize them for career purposes. But it's really good to be here, and it's a great pleasure to join you all today and to be part of this dialogue. Let me also acknowledge and thank Aspen Initiative Africa, as well as the Aspen Institute International, for bringing us all together today, and recognize my co-sponsors, Centum. Coincidentally, I've been in a number of events where, you know, we've co-sponsored with Centum, and a few months ago, John Maxwell of the Maxwell Institute of Leadership was here from the US, and Centum was again coincidentally the co-sponsor with ABSA, so a lot of shared value there, and we thank and recognize you as well. And increasingly, through many different regulations, has led and has been one of the lead regulators in the region in driving the agenda for climate finance through disclosures, through standardized reporting frameworks that require all of us as an industry to participate and to be, you know, players and positive players in that space. Because of that, quite a number of the tier 1 banks and financial institutions in Kenya have a clear sustainability agenda. And many times we do, in fact, partner on some of the larger transactions that we've done in the country. And there are a few that are in the public space. You know, Safaricom, with their strong sustainability agenda, have done a number of climate-linked facilities. And ABSA, together with other large banks in the country, have partnered and participated in that. We also have a strong and growing agricultural sector. And as you know, Kenya is the leading exporter of tea into the world. We play a big role in horticulture, coffee, and other industries. And these customers or players in that sector also have on their own right very strong sustainability goals. And therefore, as a banker working in this market, it's much easier to do these initiatives and to participate. If I can come back to ABSA, the whole idea of climate finance links very well into our overall purpose as a group that talks about empowering Africa's tomorrow together, one story at a time. And you can never talk about tomorrow without covering climate and what that means. Over the past 3 years, Absa Bank Kenya has disbursed close to 130 billion, just about, that's Kenya shillings, so that's just about $1 billion in sustainable finance, with a clear focus on inclusive finance supporting MSMEs, households, youth and women-led businesses, and climate finance. Within that number, just about a third has been directed toward climate and green investments across renewable energy, energy efficiency, green buildings, and climate-smart agriculture, and that is in 2025 alone. Reflecting continued progress in supporting sectors that are critical to the resilience and long-term growth of the economy. This has been enabled through strong partnerships, and I mentioned some of them earlier, including partnerships with Safaricom, entities such as Sunking, that was another public transaction that we did. We have Aecon, one of the lead players in real estate and especially student accommodation, and they are big on sustainability, and we've done quite a number of transactions with them as well. As highlighted in the Africa Trade Report, Africa faces a trade finance gap of around $100 billion annually, despite over $300 billion in trade flows being intermediated through the banking system. And there is a significant financing shortfall, especially for the SMEs and smaller businesses. For financial institutions, this requires a shift to support not only growth, but transition, as sustainability and climate requirements increasingly shape how capital is deployed and how markets are accessed. The Africa-France partnership presents a clear opportunity to deepen by connecting African enterprises to European markets and strengthening partnerships that share both opportunity and risk, and deploying capital to support industrialization and long-term growth. In closing, 3 priorities stand out if we are to finance a stronger and more connected Africa. Expanding access to trade and investment finance makes cross-border activity faster and more reliable, and supporting businesses to scale across the markets. At Absa, we are committed to playing our part in supporting trade, enabling business, and working alongside our partners, because we believe Africa's growth story is worth banking, and that progress is built when we move forward together. And so I look forward to the conversations today. I look forward to meeting as many of the people here as I can, because we believe in Absa that no one institution or one government can do all that needs to be done. It has to be through collaboration and through partnership. And therefore, I look forward to the day And I thank you very much for giving us the opportunity. Thank you, ladies and gentlemen.
Thank you so. So we're really honored to have had you make those remarks. I'm going to keep you on the hot seat. And I know we have just a bit of your time, but enough time to take us through the break. Let me now segue into that session on what is this financing architecture that is needed then? Where do we find this
architecture to support this aspiration of shared growth between France and Africa? It's really great to be having this forum. It's a bit strange. I'm sure everybody's wondering what is France doing in an Anglophone country and convening African presidents and leaders next week. But it's probably an indication of just the dynamics and the changes in relationships and the commitment not to be pigeonholed, because we think France, we think Francophone Africa. You think UK, you think the rest of the English-speaking world. So it's important to be breaking these boundaries. We don't have too much time because you enjoyed your breakfast for too long, so it's really your fault. But we will have to try and figure out how we can, make time, and also because one of us needs to move quickly. But in this conversation around the new financial architecture, it's good to have business people in the room. It's good to have decision makers, because we're really faced with that reality. Africa, how many people are in Africa? What's the population of Africa? Close to 1 billion. Anybody else? It's about 1.5 billion people. That's one. So considering that the world is 8 billion people, so that is about 20%, right? Secondly, the other challenge that we face is that Africa's population, the median age in Africa is 19 years. Most of us in Africa are young. That's a challenge, because as all governments are struggling with, how do we engage these young people in fruitful employment? And I'm glad that one of the topics that we're discussing today is on youth employment. And it's not just youth employment, but it's also really employment of a very politically savvy and active population, because we're seeing greater political participation by young people, which means that the pressures on governments to deliver for their aspirations are even greater than before. So this question about how do we finance development, how do we finance public services in a manner that also is consistent with the aspiration of our young people becomes critical. But the other thing, as Abdi mentioned, is we need so much money for development, whether of infrastructure, for meeting our sustainable development goals, aligning with climate. I'm glad to hear what ABSA is doing to ensure that it is, its financing is green.
But there are also, as you say, up to 1.4 trillion of local currency assets sitting in different countries in the continent. And why is it not flowing into funding? A big part of it is a very diverse policy approach in different countries, fairly conservative for historical reasons, fairly conservative policies, especially the pension funds. In many countries, there's like 2 or 3 asset classes that they can invest in, or do 20% real estate, and they put a lot of the remainder into government securities and so on. And that is changing. And certainly when you look at Kenya and you look at the policy environment around the pension funds over the last few years, you can see that progression happening that allows them to start participating in infrastructure and other projects. There's also the issue of currency and currency risk, and that's where players such as commercial banks, investment banks can play a role to see how to manage that and ensure that the funds then become available on a cross-border basis. So these diverse policies, the FX risk has been, some of the limitations that we've faced. But increasingly we see the approach becoming a lot more creative. I know we'll get to it, but for example, coming from concessional, IMF, World Bank, into more of involving the private sector, the PPP approach as we have seen in Kenya and so on. There is a need for creativity, a need for a different way of approaching the funding issue.
Thanks to Jean-Christophe and Laila for having invited me to this session. To top on what my brother just said, in fact, it's a fragmentation of the whole system. And this is where the new approach from the African Development Bank echoes very well with everything we've probably been discussing today. And I've been lucky to serve as senior advisor to the new ADB president as the one in charge of the new African Financial Architecture Development, the NAFAD. And when you look at the whole space, indeed, we sit on top of like $4 trillion liquidity reserve, from commercial banks to sovereign wealth fund, pension fund, insurers, $4 trillion. But it's so fragmented. So that's why there's a need to bring this new way of bringing together the whole ecosystem. So the FDB approach, basically, which consists in building what we call this new financial architecture, is to bring everybody together and design how you flow the money from the continental level to the local level. So you have 3 layers: continental, where FDB served properly; regional level through regional development banks, regional commercial banks; and national level through national development banks, the equivalent of Caisse des dépôts et consignations that we have in the French-speaking countries, where you deploy the resources. But again, to deploy the resources, you need some specific instrument. We're talking about a pension fund, for instance, who have hundreds of trillions of dollars in asset under management. How do you channel this money into infra projects if you don't have the right vehicle? And this is where we come with the integrated African infrastructure funds, where you can deploy those resources into one single instrument and then invest them into the continent. So how do we move from a fragmented world to a more coordinated financial system architecture in Africa? And I think that's the main issue. And everybody has been speaking about this architecture for so long. And I think for once, this is the best news ever that we can have in Africa. How do you rebuild the whole architecture? But we can go into details along the conversation.
But we can actually go in that direction immediately, because I think we're trying to make it as granular. And I think for the rest in the audience, if you have proposals or suggestions, there's no monopoly of truth anywhere. So I think it's important to also hear other people's. I guess I didn't put it on. Okay. It's important to hear from you. What are some of the granular thoughts about how we translate this? I know in Kenya, for instance, we recently launched a national infrastructure fund. And it's in the process of formation, because I think that decision was only, I think the law was only signed about 2 months ago. We are all currently debating it, but people are asking, how can this instrument actually unleash more resources, both within the country and from elsewhere? Maybe, and you've been thinking a lot about it, so to give confidence to the team here about how you see it rolling out. Yeah.
This is a very interesting example. So Kenya has, let's say, $10 billion infra projects, but not able to mobilize the whole resources nationally. This is where the architecture may work. It means FDB, for instance, will provide, let's say, TDB, which is the Regional Development Bank, resources that TDB can allocate to Kenya for its projects. It means AFDB reinforces TDB and can issue even bonds that can be subscribed by other African countries that TDB can allocate part of it to Kenya and its projects. And along the way, we shouldn't forget that, of course, it's African resources we're mobilizing, but we can still go and mobilize external resources. We're talking about France, for instance, or the Gulf countries, or other European countries that can come alongside TDB and Kenya to co-invest together. But then the second thing is that let's talk about risk. Because why the money is not flowing? Risk perception. And you know that probably you both better than I do. Risk perception cost Africa every year billions of dollars. It means, as an African country, when you go to the bond market, for instance, or the capital market, you may be rated AA or investment grade. If you compare the rate you get with an Asian country or Latin American country rated the same, you probably pay 200 to 300 basis points on top of what the others will pay because of risk perception. So the second thing is, how do you attract this money, but you de-risk it? So the second pillar is you may mobilize these resources and scroll it from continental to regional to national level, but still de-risking it. And the global estimation is that the risk that we should cover in the continent is close to 50 billion every year, but we only cover 10% of it. So it means if you want to attract even African investors, you need to de-risk this investment. So it means we need a more solid guarantee institution, solid guarantee mechanism to de-risk this investment, and it allows credit enhancement facility to lower the interest rate when you borrow the money on international market, for instance. So it's the whole architecture that has been designed to make sure we allocate the resources through instrument on a continental basis. You de-risk it as well, and you allocate it to countries where it's more needed.
Thank you very much. Any comments, Abdi, on that risk?
Yeah.
Okay, I always was that skeptical one, you know.
Yeah.
Is it really that risky?
Because risk is about perception. It's about the tenure of what you're planning to do, and especially that tenure relative to changes in the political environment as well. If it's a 20-year or 30-year program, there are a lot of questions around how to manage that risk over time. And when you take blended approaches, and there have been some good transactions and examples, but not at the scale that is required. When it's blended, when risk is shared, it's transferred in the early stages, as you said, it really has a positive impact on how this is priced and on the rates that it attracts. So addressing this whole element of risk and the approaches to it from a structuring perspective of the transactions, including the credit risk itself, currency risk, political risk, and related issues, I think is a key part of ensuring that we get there.
Thank you very much.